All right, so welcome in today. We're going to be diving into topics around ETFs and also what is happening with the SEC in terms of their enforcement actions and some of the things they've been doing that could be causing a slowdown in innovation for blockchain. We'll break into all this good stuff today. I think you'll like it. My name is Paul Barron. Welcome back into TechPath. All right, joining me today is a regular guest, one that I think you guys all love, and that is Mr. Mark Yusko coming in from Morgan Creek Capital. Great to have you on the show today.
No, great to be with you, Paul, as always, and happy Friday. So
it's going to be a good one, Mark. Let's first of all get into a few things. I want to lead off the show with a tweet from James Seyffert, who is one of the Bloomberg analysts on ETFs. He does a really good breakdown. He's been on our show before. And there's some dates to watch here. We've got middle of October, next major days to watch. October 16th with Global, and then also October 7th. And then you've got all these scenarios playing out right here with iShares, which of course is BlackRock. I'll zoom in on that a little bit so you guys can see it. Second deadline coming up on 10/17, and then a slew right there on that same day. First of all, I want to get your opinion on, do you think that this October is when the SEC might actually give us an early Christmas present? Or do you think it's going to get pushed again?
No, look, I'm 50-50 at this point. So I do think more tricks than treats for anyone who's ahead of BlackRock's 10/17 date. So any decision before that date, I think is a negative decision. I'm not sure it'll be an outright denial, but will definitely be an extension and a push. And then we come to the big dog. I believe, and I've said multiple times, that BlackRock will be the first one. I've actually been saying that for over a year. I actually might even go stronger and say they'll be the only one approved. And be like, oh, that'll never happen. That would be too much, corruption. I'm like, well, I'm just saying it's certainly possible. Mm-hmm. What's probably more likely is BlackRock first, and then a gap, and then some number of others. But the thing is, whoever's first is going to get the vast majority of assets. Vast majority. Yeah. So
first mover is always going to be taking. I mean, that's just like the gold ETF kind of with same kind of
gold
scenario.
ETF was an example with GLD. You had the Bitcoin futures ETF with BITO getting 98%, and then a couple others getting like 1% each. So that's just my belief, and I believe it's who you know in this game, not what you know. There are a lot of people who should have gotten approved, right? The Winklevoss twins were the first to apply. They should have gotten approved. There was no reason not to approve it other than, again, kind of the way the game is played, and the people in charge want to be in charge. So any new disruptive players, I think, are unlikely. Kathy Wood partnered with one of our portfolio companies, Amun, to do 21 shares. That looked like a great application. Dinged, pushed out. I think Bitwise is a day ahead of iShares on 10/16. As much as I would love it, again, portfolio company, full disclosure, I would love for them to get approved. I just don't think it's going to happen. I don't think they'll be denied. I just think they'll be pushed. And here's why I'm 50-50, Paul, to answer the question, is I think they could approve on the 17th, but I don't think they will. I think they'll push it into next year. So you push 90 days, that gets you into January.
January 15th,
You could push again then into March, April, but that's it. Then you have to approve. Now, what's interesting is we have this little thing called the halving coming up in mid-April of 24. And so it would be an interesting alignment of stars. But I said, could they pull the trigger on BlackRock in a month? Yeah, they could.
Yeah. All right. Well, with that, and to your point, the third deadline, just so everybody kind of can put it on your calendar out there. You've got January 15th for BlackRock, and then moving in all the way into March, what we kind of discussed there. March would be an interesting timing. I think you're right, because obviously the halving right there on the cusp of that, along with maybe a little bit of lightening the load in terms of inflation, because I feel like we're going to continue to see some inflation hits through the end of the year. What is your thought on how the inflation numbers came in this week and how the Fed might react?
I don't think the Fed cares about gasoline prices, quite honestly, Paul. All this little blip is gasoline prices, all of it, right? I think most of the other components were actually negative. And the gasoline prices are because Saudi has decided to go a different direction, right? We had a very hunky-dory relationship with Saudi from 1973 till now, and it's clearly over, right? I mean, the big guy went over to Saudi right before the election last year and tried to get them to pump more to get oil prices down and gasoline prices down, because there's this inverse correlation between presidential popularity and gas prices. And they basically said pound sand, and so he came down, he came back and drained the SPR.
Yep.
Terrible strategic decision, but a politically expedient decision to get gasoline prices down. Guess what happened? Democrats did pretty well in the election, and because
there's no way out for that now, though. I mean, there's no way to get those reserves back out.
Now we have an empty SPR, and the thing is, we can't fill it up ourselves because. And again, not to get too technical, but there's light sweet crude, which we produce, and a number of other places, Nigeria and others produce. And then there's heavy sour crude, more sulfur content. Because we cut this deal with the Saudis in the 70s, we built all of our refining infrastructure around processing heavy sour.
Yeah.
Well, here's the problem. If now Saudi is going to sell their heavy sour to China and Russia and other places, and we're not going to get as much of it, what are we going to do? Well, we got to build new refineries or retrofit the refineries. Turns out no one wants a new refinery in their backyard.
Yeah.
I think I'm right. It's been like 30 years since we built a refinery. Turns out they spit out pollutants and things like that. So nobody really wants one around. We all like driving cars, by the way, and living our lives. And we can stop using oil. No, we can't. Yeah. Everything you do every day, the vast majority of it is powered by oil and gas. The vast majority. And yeah, you say you could get an electric car, but where'd the steel in that car come from? Did they make it with electricity? No.
Yeah,
How about the plastics? No, oil. So it's kind of comical when I hear we're going to outlaw fossil fuels. But back to the inflation number. I think this might not be temporary in the sense that Saudi announced they're going to do a voluntary cut. Why? Because they're just sticking the knife in a little bit deeper, because they're like, all right, guys, you said you were going to refill the SPR. You didn't do it. Oil prices were all the way down in the 60s. Could have easily filled that thing back up.
Done it, for sure.
But now oil prices are in the 90s.
Yeah, we're going to hit $100 a barrel. For sure.
Yeah.
How does this, so when you look at that, Mark, and you look at an election year coming in, you've got all this pressure from the macro side, including most likely jobs market getting a lot stiffer, companies starting to really get some pressure on them. We had bankruptcies at the highest point ever. We've had, a very long period of time for independent companies. This does not look like a rosy picture. Where do you think we come out of this in relationship to the timing of the halving? Bitcoin ETF, maybe into next summer? How far into 2024 do you think this happens?
So, I believe the ETF will be approved sometime around year end, whether it's in early January or December, sometime in that time frame. Okay. And I think that will pave the way for a very large influx of capital. I know you've had Eric on the show about Tunis, and he does this great work, right? I mean, there's 30 trillion with a T, 30 trillion. Remember, 1 trillion is $1 every second for 31,710 years. But 30 trillion is going to come into, or that's the total amount of money managed by RIAs and others that is not allowed at this point for whatever silly reason to own Bitcoin. And they can't own GBTC and they can't own Bitcoin miners, and they've called a timeout. Well, once there's an ETF, particularly if it's an ETF that BlackRock runs, there's going to be no excuse, and they're all going to have to approve it. Their clients have been asking for it. I would say I have a family harmony account at UBS. They won't let me own anything related to, like, why? It's my money.
Right.
You should let me buy what I want to buy. And they're like, no. So I think all that goes away. And I think Eric's number is, let's say 0.1% comes in. That's 30 billion. Well, but wait, 30 billion on 500 billion, that's not that much. Well, no, it's not 500 billion. 400 billion of the 500 billion of Bitcoin's market cap doesn't really trade. It's either locked up like the Satoshi wallet or the Winklevoss wallet, or hodlers that just said, take it out of my cold dead hands. It's only about 100 billion that is the free float, to borrow a TradFi term. And so 30 billion on 100, that'll move the price.
Yeah, for sure.
I don't think it's going to be 10 basis points. I think it's 1%. I think you have to do 1%. As a fiduciary, if you got, 50% in equities at some of the highest valuations in history, and you got, another 30% in bonds, which have had the first 2 negative years in the history of the bond market, 140 years of history, 2 negative years, looking pretty ugly. And you got this asset that is the best performing asset again. Okay, 11 of the 14 years that Bitcoin has been alive, it's been the best performing asset of all assets. It's the best performing asset again this year.
Yeah, Eric hit on his prediction about 150 billion in terms of market impact. Do you feel so you like that number, or you think that?
Well, I think he's 150 billion would be 0.5%, right? Instead of 10 basis points. And it looks like he's updated his thoughts. I'll go further and say 1% seems more likely. That'd be 300 billion. 300 billion on 100 billion of free float, price goes up a lot. And here's the interesting thing, Paul, is the way halvings work is the fair value increases. So we've got a tailwind that the fair value today, based on Metcalfe's law model that Tim Peterson runs and that I think is fantastic, says that the fair value is somewhere in the low 50s, 52, 53, let's just call it 50. So at the halving, fair value doubles. Well, what do you mean, Mark? What are you talking about? Well, think about it. The miners who secure the network, their costs are fixed, mining machines and electricity. So if their block rewards, the number of rewards that they're paid to secure the network, gets cut in half, and the price doesn't move, then they're out of business. So there's a built-in mechanism to move the price higher, which is actually really interesting because that attracts attention because there's movement. And so, long story short, fair value, every halving has added a 0. So we went from 100 to 1,000. Then we went from 1,000 to 10,000. Now we go from 10,000 to 100,000. So if fair value is 100,000 and we're trading at 26, it's a pretty rapid increase to fair value, I think, as investors buy things that are below fair value. But then what happens in the fall, post-halving, you get this parabolic blow off top. And in the previous cycle, fair value was around 30K. We got all the way to 69.
Right.
That was because there was too much leverage and too much gambling and speculating. I don't think we go 2x this time or 2.5x this time. Could we get 1.5x? Sure. That gives about 150K, something like that.
Yeah. Well, that is okay. So that's very intriguing. If you're estimating this could be in the $300 billion area,
maybe,
for based on just the exposure to these funds and obviously how that might play out. How do you think retail responds to this? Do you think retail is going to come in like a banshee coming in on this with a lot of now what would be legitimized ETFs How do you think they play it?
Again, I've been saying this for 5 years. My hashtag get off zero is the wrong number, right? This is a truly unique, diversifying asset that must be in everyone's portfolio. Okay? It doesn't have to be your whole portfolio. I never said that. It should be at least 1%. I'll argue 2 or 3%, but 1% is fine. And had you done that a decade ago, okay, had you taken 1%, half from stocks, half from bonds, 1%,
yeah, for sure,
put it in Bitcoin, your portfolio would have done two things. It would have compounded at about 250 basis points per year better with less volatility. Yeah, so it reduces risk and adds return. It's the perfect diversifying asset because it's 0.0 correlated to bonds and 0.15 correlated to stocks. And look, Markowitz won the Nobel Prize for a reason. CAPM works. When you add diversifying assets with reasonable levels of volatility or even high levels of volatility, if they're highly uncorrelated, your portfolio becomes more efficient. And so as a fiduciary, you can't not have this asset, particularly if now there's a ETF by a trusted brand.
Yeah.
So retail, many of them have abdicated that day-to-day responsibility to their financial advisor in a good way, right? Most people shouldn't manage their own money. I don't mean it's a bad thing. It's just that's not their specialty, right? They're nurses or construction workers or financial managers or whatever it is. That's not your day-to-day thing. And it didn't used to be that way, right? In the good old days, you worked for a company and you had a pension and they had a professional manager that took care of the money and you got a defined benefit for the rest of your life. And then they schnookered us by saying, hey, we're going to change the rules and we're going to make it portable and defined contribution. Well, that was just a gift to corporations because they had to spend 30% less to fund their obligation, went straight to their bottom line and into the manager's pockets, and they thrust that responsibility on the individual. The average individual doesn't spend the time or have the knowledge to manage their portfolio. It's not a criticism, right? I'm not a great chef. I shouldn't try to cook my own food, right? I just, that's not my expertise.
Sure.
I should go take advantage of other people's expertise. I am a financial manager. I take care of people's assets. So I do think that the average investor will be very well served by having a good RIA, registered investment advisor, a good financial advisor who will say, I gotta put 1%.
Yeah, let's go that direction.
Again, that's not even a big number. If we got 2 or 3%, Katie bar the door.
Yeah, but that would be a different world for sure, especially in digital assets. Okay, so to your point of BlackRock possibly being kind of maybe the only horse in the race, you've got now. This is where it confuses me, Mark, because you've got Franklin Templeton now joining in on this spot Bitcoin. Yep. They came in this week. This is another heavyweight. You got Fidelity in the race. These are real players. Yeah. Surely there's going to be other angles here.
Yeah, and that's why I say I'm probably wrong that it will only be BlackRock, because how do you, with a straight face, approve BlackRock and not approve Franklin Templeton or Fidelity? Like you could say, well, I don't want to approve Bitwise or I don't want to approve 21 Shares because they're crypto people. They're not traditional people.
Yeah.
They probably understand, not probably, I know they understand this business better than the TradFi people. Not the TradFi people haven't hired good people and are smart. Actually, the Fidelity team understands as well as anybody, and they're amazing. The others, I don't know what kind of resources they have, but I know the quality at 21 Shares. I know the quality at Bitwise, high quality. So to not approve them and approve the Johnny-come-latelys who weren't there at the beginning, who weren't there on the pioneering phase, I think is just blatant corruptionism. The way, but look, we know that's how it works. Think about all the people who've applied for ETFs. No one that I'm aware of, and I'm probably wrong, but no one that I'm aware of, other than BlackRock, has gotten 99.99% of their applications approved.
Yeah, exactly.
BlackRock,
Yeah, for
it's
sure.
756 applications. They've been denied once. I mean, come
All right.
on. Math, just the mathematics.
The numbers are there.
They make a mistake every now and then. But
Mark, I want to jump to another topic, and that is the SEC's actions here recently. We've had more action coming in on not only what they've done with Stoner Cats, which was Mila Kunis and Ashton Kutcher's project, but the point being is that they've really started to accelerate this pressure. And what do you think is going to come of this? How do you think who from the NFT side or even from Web3 can come out and fight like a Coinbase can and go direct, kind of.
Wow, that's a fantastic question. And I mean, that's a really, really good question. I mean, the only people that really, could take that mantle, I'd say, be Yuga Labs. I mean, they're the only one to have a deep enough war chest. I think that's a fantastic question. Look, the idea that the SEC, and I won't name names of the person leading that charge, picked of the thousands and thousands of projects that all have the same characteristics. Mm-hmm. Okay. Picked this one to prosecute and to coerce and threaten and get them to, quote unquote, agree to a settlement at an amount of money that is insignificant to those people. I mean, Ashton, writing $1 million check is like me giving you $5. So is so blatant sensationalism and marketeering.
Exactly.
It's actually sickening. It's like when he fined the Kardashians. Yeah. I can't remember which one. Maybe it was Kim.
It was
like 100K or whatever it was.
Yeah.
I mean, really, of all the things out there, you're intentionally picking influencers.
Yeah.
Because you think that's going to make a statement to, if you ask me, you're just rallying those supporters against you. So I don't, and the capriciousness of it is insane. And they'll say, we don't have the resources. Well, and actually, I just posted this on my Twitter feed. Eric Voorhees gave a speech, an opening speech at Permissionless this week on Monday. And if you haven't seen the speech, stop whatever you're doing, even watching this show, and go watch this speech. And he talks about this, that the capriciousness of men or humans, men and women, of humans versus the code and the laws of humans being capricious and selectively enforced to whatever suits the interests of the corrupt people at the top versus the laws of code. And he actually had this great line: code is better than law. And it really is, because it's not capricious. And this idea that an NFT, which is an item, right? It's a collectible, it's a commodity, is somehow a security, is nonsense, right? Are my Pokemon cards now securities? Is my stamp collection a security? Is my art collection? Are you going to tell me you're now going to go enforce against all of the billionaire art collectors? Really? You going to do that?
Yeah. Well, I mean, it is getting a bit out of hand, I think. And I think this is also, to a certain point, as you had mentioned, it's a lot of grandstanding, but it also, I think, puts Gensler in a very interesting position now with lawmakers, because I think the lawmakers understand what grandstanding is the best. The politicians, hey, listen, you're pulling a page from our book, stay in your lane.
Well said.
Which I think now, they've got, I think, a bit more of an angle now of overreach going at the SEC. Obviously, there's a lot of political play right now coming into this. We're going to see maybe how things line up with the House here, actually this month, on potentially stablecoin bills. So that I think will will be an interesting aspect, because that will, of course, tie into what Gensler has been fighting for so long against. I want to go into our last topic, and that is the movement into some of these alternate blockchains. Visa just recently did a full deep dive and analysis on blockchains that they could use for alternate payments. We did a whole video on this. What I want to get or show you, this was the transaction fees, but I just want to go down here and show you the ones that they actually tested and did this full report on. So Solana was in this, Avalanche, Flow, Algorand, Stellar, Tron, Arbitrum, ETH, and then Polygon. Solana wins the game here with Visa. They're going to do the test, and we'll find out if Solana can carry water or not. And with a payment system. And if they can, okay, now we got maybe a new game in town. How do you think this plays out for TradFi, especially someone like a Visa saying, all right, we're going to go ahead and take blockchain full front right here on this?
So look, this is so inevitable. Visa today, literally today, as you and I are sitting here talking, runs its entire network on a mainframe computer.
Yep. 65,000 transactions per second.
A mainframe computer that runs on COBOL. Now, I was having a conversation with the guy at Visa last year, and I was just like astonished that he's telling me this. And he said, yeah, it's interesting though, because it's obsolete, and we should probably have upgraded, but it's really expensive to upgrade. And for what they do, right? Think about what they do. They basically keep tabs through this little plastic card and network on what I do during the month, right? Because I never use money, cash. I use my Visa card, or actually I have a MasterCard, but same thing. And I get all my things, and they have a database, and they keep track of all the things that I do. And then once a month, so they talk about high frequency of transactions. It's really one transaction a month where they actually get paid. And then they settle up. Now they do transactions with merchants and all this other stuff, but the bottom line is it's a database, and it doesn't need to be really swift. So they have this mainframe computer, and he joked, said two things. One, it's kind of a moat because no one knows how to hack COBOL, so we don't get hacked as often. I'm like, all right, okay, that's funny, but all right. But I happen to know the data only because my son was the auditor for Visa for a while. And they get attacked 30,000 times a day.
Wow.
30,000 times per day, someone's trying to hack in there and steal our numbers. And occasionally it happens, right? We have to get a new number because they have a data breach. So it's not perfect, but it is a pretty good moat. But the funny thing he said is, the problem is when it breaks, we got to put a light on at the Sunnyvale retirement home and get some 80-year-old to come fix it, because they're the only ones that know how to code COBOL, which is true. My 85-year-old dad can still code COBOL. So, and no 25-year-old can. But I think what's interesting about this is it's inevitable that 75, 60, 50-year-old technology, SWIFT, ACH, FedWire, all of that gets vaporized. I mean, we had an experience here recently where we had some fraud. One of our clients got hacked, and the hacker changed his wire instructions, and so we sent the money to the wrong bank because it came from his email account, and we called the bank to say, can you help us get it back? And we lost the SWIFT message. Like, what do you mean you lost the SWIFT message? We printed out the fax and it got thrown away.
Interesting.
You say fax? I mean, this is 2023, and international banks, because this is across international borders, you're using fax machines and paper to do records for money. So they got to go to blockchains, and everything in the financial system, all of it is going to blockchains now. And it's interesting because I've been taking a lot of grief for a comment I made the other day about Solana. Solana historically has had some problems, right? They've had some downtime problems. They've had some transaction problems. They're like, no, that's all fixed. I'm like, great. Show me that it's fixed. We're going to find out. And
Yep.
everyone's like, well, but Visa wouldn't have picked them. No, Visa picked them for a trial. And a
Yep.
trial is good. And a trial will find out if the network can handle, one, the increased volumes, because historically it wasn't able to handle the volumes. It would crash. And it's not like, it's different than like, we have to restart our phone all the time, restart our computer all the time. We just live with it.
Quite a bit different when you're getting into those payment systems.
The funny thing about that is, it was like when the chairman of GM was saying, because Bill Gates had said something about, if the automobile industry could have kept pace with the innovation in the computer industry, they'd be far ahead. We would have flying cars by now. And the guy was like, dude, really? If we were as good as you, we'd have to pull over to the side of the road every 20 minutes and restart the car. I mean, come on. So, but the point is, the technology is going to migrate. And one of the challenges of computing is you can have fast or secure, not both. So the Bitcoin blockchain is so slow. It's the most secure blockchain, full stop. Okay? It's been constantly up, except for like 0.0001% of the time. It's like 23 minutes or something over 14 and a half years. So, and there's never been a fraudulent transaction. Not one. Hundreds of millions of transactions, not one fraudulent transaction. And talk about hackers. Everyone on the planet has tried to hack the Bitcoin blockchain because it's worth, $500 billion and haven't been able to do it. And we say, what about when quantum? We'll deal with that when quantum comes. But
for sure.
Capital I, capital F, quantum comes.
Yeah, for quantum computing.
I'm excited to see Solana get this chance to, have exposure and see if Visa can do it. Now, it really is a limited trial because we're talking about a stablecoin settlement, which, that's a good step in the right direction.
It's a good step in the right direction. Last couple of questions for you, quick questions. One in reference to self-custody. I know you guys are involved a little bit with Ledger. You look at Ledger's somewhat misstep here recently in the markets. They still are, I would consider, being one of the number one, maybe one or two. Okay.
I think Ledger has an insurmountable lead in bringing this elegant solution, this browser-like solution, this smartphone solution, and now this HSM. And what did they do? They hired the guy who literally created the iPod. From Apple.
No, it was a stroke. It was a stroke of genius when we saw the release. I was very excited about it. Then, of course, Ledger, had a little bit of a PR misstep this year. Many people upset. Those kind of things happen. But the slowness of the stacks coming to market is the thing that I'm still concerned about. Obviously, I ordered one of these last fall. It's probably going to go on a year now of getting a stacks in place. Any word on when they're going to release one?
They did say October, right? And so October is still a month away, but we'll see. I'm with you. But it's not even the stacks. It's the next thing after the stacks.
Next product.
It's the game changer.
Mark, it's always good picking your brain. We get into a lot of different things for sure. Thank you so much for stopping in today. We appreciate it.
No, thanks for having me, and we'll see you again soon.
All right. Thanks, Gary. All right, so you guys, maybe you're tuned in over on the podcast side of things. Make sure and jump over here to the YouTube channel. It catches additional analysis when we break down some of the charts, all that kind of stuff you can catch here. All you have to do is subscribe and then maybe hit that bell. That's going to give you notifications of our live streams. If you want to reach me, you can do that out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.